welcome to The Trade. Before we get to the charts that matter, let's have a quick look at what traders are watching out there. And of course, President Trump has said he would add new tariffs to his sanctions threat against Russia if Russia doesn't make a deal to end its war in Ukraine. Trump also adding these could be applied to other participating countries. The dollar little changed after earlier dipping to a new 2-week low. Investors continuing to await concrete announcements about Donald Trump's tariff plans. Gold prices soaring to near 3-month highs, trading just below their record peak, fueled by the soft dollar and a lack of clarity around the policy plans. While oil prices eased to a fresh 1-week low, as the market considers how Donald Trump's proposed tariffs could affect global economic growth and demand for energy. And coffee could be more expensive. It rose by another 4%, supported by a lower production outlook in Brazil, the world's largest producer. White sugar rebounding from multi-year lows hit in the previous session. Let's get into the technicals now with Nick Twidale from ATFX. The amount of times I just said Trump and tariff and policies and unsurety there, it's all playing out in the currency market.
It certainly is. Yeah, you've kind of stolen my rhetoric there because
well,
that's what I was going to talk about. I don't think so. It is all about, for currency traders in particular, it is all about tariffs, and they really want some certainty, and we haven't got it. And to be honest, we haven't actually seen those excessive moves, and I'll take away MEX, CAD, and probably China out of that for the time being, that we thought we might see on in the last few days or the first few days of Trump 2.0. So the dollar's actually been relatively well behaved.
Do you think it's because we kind of lived through this before, so maybe people aren't pressing the sell or buy button as quickly as they did in 2016? I
think so, yeah. I think there's still a fair few of us old people, a bit long in the tooth, that have seen it, and Trump 2.0 is slightly different to Trump 1.0, but they're waiting for certainty, and you said it perfectly there. We need certainty on what tariffs are going to come, how fast and how hard they're going to come. And it almost feels like, if you watched his first trip to the Oval Office the other day, and I was watching it, and he just threw those comments out about Canada and Mexico. It's like, okay, that's coming. We haven't really sorted it out yet. So the hope in the market is that it's going to be steady and progressive, and there will be tariffs, but they won't hit them very, very hard, and as he threatened to. I think the fear in the market, and that's still priced into options at the moment. I know CAD volatility and vol's at its highest at the moment for months and months, obviously, is that he does go hard, and it comes in and he hits 20, 25. The 60% have been touted against China. That's when we'll start to really see some big moves in currencies.
All right, let's have a look at the Aussie, because Citi coming through with an interesting call here as well, that maybe the best way to play a potential imminent pullback in the greenback is to buy the Aussie. What are the technicals showing you?
I'd go the other way to Citi.
Okay.
I'm still very much a bear. I mean, you can see that's the daily chart. I put the daily charts out today. We're still very much in a downtrend. I think I go back to what I think is going to really dominate moves in the Aussie at the moment, and I think it will be that tariff. And I think for the Aussie in particular, it's those tariff threats against China. I think he would go harder against China than. And I have to put a huge caveat on: I cannot read Donald Trump's mind.
No one can.
And I think that will pressurise the Aussie. Conversely, I can kind of see where Citibank are going. It's the Aussie is probably sometimes the better option than some of the other major currencies we've got at the moment, just from the way our domestic market's moving. But I really do think the greater global growth story is going to hit the Aussie harder than our domestic situation at the moment.
All right, you mentioned the CAD before. What are we seeing in the loonie, particularly as we wait to see whether or not there are going to be tougher sanctions on Canada?
Yeah, it's been hit, and that chart actually doesn't show it too well, but there's that chart operated very well. That downside trendline support bounced perfectly off of it the other day when Trump did come out with those notes, but it did do 200 points in seconds. I think we're going to see higher volatility. I think you want to play from the short side of CAD. That top side level that's coming in there, and it goes all the way back to that high back in 2020. If we get a breakthrough there, it does open up. And I think Canada's got issues. We know it's got political issues as well. We're expecting a rate cut from the Bank of Canada coming next week as well. So all these things are adding up to downside for CAD. When we add them all up, normally there's got to be a contrarian reason that the market goes the other way to take out stops, etc. But I think you probably look at CAD, it will be very volatile against the dollar. maybe you start looking at CAD on some of the crosses. And one of the ones I'd maybe look at is Aussie CAD. So that might be the one that you buy the Aussie against, because the CAD will move a lot harder than Aussie short term.
Interesting. All right. What about the yen? Because we're speaking then of cuts. The Bank of Japan likely to hike tomorrow to the highest level in 17 years.
Yeah, for us in currency markets, if you're looking at interest rate differentials, if you could handily take away what's going on in the US, this would be a great time for longer term traders, because we have got different moves coming from different central banks. And obviously with the Bank of Japan, I think 80% priced into hike on tomorrow.
Yeah.
And we've got the ECB next week, we've got the Fed next week, and we've got the Bank of Canada. There should be interest rate differential trades coming up in that. And I think, once again, you probably want to take the dollar out of the equation trading the yen at the moment, even though we've got the yen chart there. You probably look for yen on the crosses, and you're selling yen crosses, I think. It is going to come down to the rhetoric we get from the Bank of Japan. Are they going to continue to look at data? Probably.
Yeah.
If they come out more hawkish, then I think you look to jump into probably Aussie yen, sterling yen, euro yen, and dollar yen. It will provide with great trading opportunities, but it will be fast, and it will be whippy, and it will be hairy.
All right. You mentioned there looking as well at what we're seeing in Europe and in the UK too. What is cable telling you?
It's bounced nicely off of those lows that we've seen, in line with the dollar move as well. We're going to be watching data as we move forward, but it does look like in a bit of trouble. You've got to keep an eye on those gilts as well over in the UK. It's trading nice. If you look at this chart, this is the longer term chart again. I think you'll find most traders fading the move. That trend line, that topside trend line resistance is a very good trend line on the dailies. It's got like 5 or 6 different hits, so it gives it a lot more credence than other sort of technical indicators that we get. It's coming in just beneath 124.50 at the moment, I think. So it's a bigger scale, it's the daily, but I think you'll find most of the longer term traders fading that move up towards 124.50, that trend line resistance, and looking for a move back down to 120.
All right, and with the euro, is that just rising on the dollar weakness, or what else are you seeing?
I think it is. It's been a dollar weakness sign. I'm still a big fan that we get a downside move in the euro. I think we could see a bit of a parity party for euro traders in the next few months. We do, don't we? And as you can see from that trend line, I think those lows are down about 103.20-ish. If it breaks down there, it does open away from a technical perspective to see parity. But it will all depend on what we get from Mr. Trump in the next days, weeks and months.
And probably not for us a repeat of, what was it, 2010, when we had a parity party with the greenback. Unlikely anytime.
I don't think that's going to happen.
What a shame. All right, Nick, thanks. Nick Twidell from ATFX, and that does it for this edition of The Trade. Be sure to join us again next time.